How's it going, everyone? Welcome to another video. Now this will be a simple trade recap video on the two trades that I took yesterday on EURUSD. It was a long and a short trade taken yesterday. Now the short trade was closed, but the long trade it's still running. I did take some partials around this region over here, right? So about 30% partials were taken over here. Main reason being I don't usually hold my trades too long overnight, especially if it's reacting off a supply zone. But in this case, I did hold it overnight mainly because I was able to grab a short here, which provided me with a decent amount of profits that allowed me to let this trade to continue running, right? Because my main target will be to grab this liquidity here, and so I'm letting it run. So essentially what the thought process was is price was approaching this region here, and what we saw was we have a clear 10-minute zone here. Right, very clear. Now the other thing we have is we have this liquidity, sort of a liquidity zone here, right? You have some liquidity resting here, and this zone over here did essentially grab that liquidity. Now one thing I'd like to just introduce is something that isn't necessarily new, or it isn't a secret sauce or something that would change your trading completely, but it would make your trading, it would make a lot more sense in your trading. So essentially what I'm doing is I'm marking these zones up, and what I'm calling them is an impulsive liquidity grab, right? So an ILG is for short. Now a lot of these trades that have an impulsive liquidity grab tend to work out really well. Now it's not only just for the POIs, it's also for the entry points, which I had one resting over here. So what happened is we had this zone created, we grabbed some liquidity in this region, right? We grabbed liquidity in this region, and we had an impulsive move up which did break structure, and we did indeed react to a supply zone here. Now that's completely fine, because what we're looking at is we want to trade the reaction. So if we get a valid trade here, we'll still take it, although it reacted to a supply zone, because chances are, one thing you might notice is it took quite a while for us to sort of react off the supply zone and push down. So that should tell you enough that this supply zone wasn't very strong, because it took a lot of time and momentum to actually push price down to react off of that supply zone. So let's dive into the entry point, and I'll give you an idea of what I was essentially looking at. So this will be, my chart's currently in the UK time, so around 7:55 we had an impulsive move down. We didn't really break this zone. Instead what we did was, this essentially is what I call the impulsive liquidity grab, right? We had quite a bit of liquidity resting here, so you can see how it grabbed that liquidity, immediately formed a impulsive move up, right? We got our impulsive move, and then essentially if we look at the 1 minute, this is what happened. So I'm going to play price forward slowly. We have this push down. Now this might tempt a lot of people to quickly enter the trade, because they might have a bit of FOMO that they might have missed the trade. But what I saw was, this seemed like inducement to me, mainly because of how quickly it tapped and reacted to it. And the other thing is, at this point I wasn't really looking for a trade yet, because mainly in this region I looked for a seconds entry. So this was something that formed, and it was clear inducement for me. And obviously when price pushes up this far, people would, automatically assume, shit, I've lost my trade, I've missed it. I didn't get an opportunity to enter it. And so one thing that people might, also do is try and take a trade off of this zone, right? Which again, it's completely valid. But for me, when I saw that inducement point, I was convinced that we should be able to sweep that and actually push further down. So what I did was I waited for price to really push further down, and you can see how, although we've reacted to this, we have failed to break this previous high, and we've created a lower high, right? We've failed to break this high, and we've sort of slowed down. The momentum has pushed. We are unable to push further up. So at this point, what we're seeing is, okay, price is sort of struggling to push up. So what could we look for next? Right, at this point people might start looking for shorts, which again, it's completely okay. If this is how you trade, then it's fine, because you could have looked for a short here. But then again, what we're looking for is for this mitigation to be, this liquidity to be grabbed, and we want to look for an entry then. So let's drop to the 5 seconds so that you can get an understanding of what I was looking for. Alright, this was a trade on, I think it was the 15 seconds. So you have price sort of react around here, and what we get next is an impulsive push down, right? And I think on the 30 seconds or the 1 minute, there you go. You see how what happened here, right? So we grabbed some liquidity, we pushed down, and we created an impulsive liquidity grab. And in this region, we're repeating the exact same thing that has happened here. And what we've done is, this essentially proves how the market is fractal, right? What happens on the higher time frames typically repeats itself on the lower time frames as well. So in this essence, right, using this as our main basis, we have a liquidity grab, which is exactly what happened here. We have our impulsive liquidity grab, we have liquidity resting here, which is what happened here. We created an impulsive liquidity grab, which again repeated itself here. And so what we did is we went to the 15 seconds. Sorry, the trade's a bit out of place here. And we got that impulsive liquidity grab, right? So at this point, I marked this point and this point for my change of character. And we also have a supply zone that was resting here, right? So what essentially I did was I waited for price to push further up, right, to create a chock. And we have our chock. This is just a complex pullback where it just pushed down, and it not really complex, just a pullback, essentially, that then resulted in a change of character. And what also convinced me is you can see how this supply zone here, we did get a reaction initially. We tried to push down, but we failed. So what that tells me is, look, we failed to follow through with this supply zone by breaking this entry here, or this low here, which is the impulsive liquidity grab, which then tells us that, you know, this is a strong low, because this strong low here is essentially what caused this supply zone to fail, and also a chock to form. Now, a lot of people might, you know, be wondering, like, is this really a chock? Some people have different definitions of what a chock is, and I'm not here to say that you are trading a wrong way, or the way you're marking chock is wrong, but I feel like this has worked for me for a long time, and it has proven itself for a while, you know, based on how I've been trading. So this is the method I follow personally, and if any of you watching the video feel like, oh, you know, this isn't how I want to mark chocks, then it is completely fine, and I suggest you use exactly what works for you, and you don't need to copy what people are doing. So what happened was, we had our chock, we have our supply zone reaction, failed to follow through, so we have our invalidation. So what we have now is we have an impulsive liquidity grab, so a liquidity grab, which is something I mentioned in our entry criteria. We have our chock, as well as a break of structure at this point, and we have our invalidation. So at this point, almost every single box for my entry criteria has been ticked. So what I do is I take an entry of the 25% mark of this zone here, so we can move price up a bit. And then what we get is a reaction here and a push up, right? So this was the long trade, and what happened, you know, subsequently. So if we look at the 1 minute, we can have a better look at exactly how it reacted. And as soon as we got that reaction, you realized how price, you know, automatically really pushed up, you know, hard, and it just kept pushing, right? So now you might be wondering, how did you manage this trade? So my simple management rule is, once we get a 1 minute break of structure, right? So we got our 1 minute break of structure, I automatically set stop loss to entry. So I have stop loss to entry here, put it in the right. So we have stop loss set to entry. We're chilling at this point. Obviously you might get taken out, or you might not get taken out, and again, this is ultimately up to how you've been trading and what works for you. So for me, I always have this rule where as soon as we break structure, I put stop loss to entry, because conceptually speaking, if we have a break of structure, what you should be seeing next is, order flow forming, right? You don't want to see price coming back. It may form a complex pullback, but then again, I'm here to protect my capital because I'm already running, in profit at this point. So this is the long trade that I took, and it was a very textbook and a great example of how the markets are fractal. Now, towards the entry point, it was a bit messy, it just sort of pushed down, but as soon as you get an idea of what was exactly happening here, this trade makes a lot more sense. So let's look at the next short trade that I took. I'm just gonna fast forward it a bit. So, oops, that was a bit fast. And everything's moved again as usual. So let's yeah, there we go. Let's move this here. Move this trade just about here. So we had our 1 minute mitigation here, right? Sorry about the mess. So what happened is we have a higher time frame zone here. I think this was the 30 or the 1 hour. So it's a clear 1 hour zone. We did break structure here, so we had minor break of structure, and so at this point what I did was I looked for an entry at this point. So what we had was we had a 1 minute mitigation here. We did have a break of structure here, a really minor break of structure, but it makes sense to me because what we have here is a demand zone that failed, so we did break structure essentially. So what we did next was, let's rewind this a bit so that we can get a better idea, is you essentially have a change of character here, right? This is a bit of a I would say aggressive trade. So we do have our break of structure here, right? So we do have a break of structure here. The trade was set, I think it was around here. This tool just moved up, and then what we have is our break of structure. We have our invalidation. We have a chock as well, just around this region here. So what happened next is I set a limit somewhere around this region. So yeah, it's about this region. Just let me have a quick look at my trade. So yeah, 1.05643. Yeah, so that's where the entry was set, and we got our mitigation at this point, and we have a push down almost immediately. You have a wick and then you have a full push down. So at this point, what happened is we got our break of structure here. So we have a 1 minute break of structure. So again, following our rules, we take, let me just copy and paste this, put stop loss to entry, and we let the rest run, right? So we just let the rest run, let it do its thing. Let's go to the 5 minutes, so it's a bit faster. And I'll also tell you guys exactly where I closed my trade. So around this region, right, this is where we had a reaction to a zone over here, right? You can see that this is a valid demand zone because, oops, one sec. This is a valid demand zone that we have, and we did essentially break structure at this point. So we broke structure here, and so this is a valid demand zone. So because this is a valid demand zone, and mind you, this would be, I think this was almost around 10 p.m. So usually I don't really take any trades after my trading hours, but this was a really nice hedge that I had to take because of how clear it was. So what I did was I set my take profit target just about this region here, right? And this is a valid and a very, very logical point to set your take profit, which is at the next supply or next demand zone. Now you might be wondering, why didn't you just set this here? Oops. Why didn't you just set this here then? Over here instead. You could possibly have done that, and again, you would have made a decent chunk of profit from there and closed with a really nice hefty profit, and you would have gotten a short as well. Now the main reason why I didn't close this here is because what I wanted to look for is a trade, or at least a reaction that may tell me that, look, this trade here might be pushing down, And if I'm gonna catch that trade, I took a short here, which also allowed me to protect my long here, because if this indeed pushed down, then I still have this trade running to cover my loss here, right? It's not even a loss because it's stop loss set to entry, so I haven't really lost anything, but in this case I'm protecting my long trade. So as soon as we tapped this demand zone, you realized how we sort of pushed forward, we immediately tapped in, slammed all the way up, broke through this supply zone, right? And if we look at price at the moment, see how we broke the supply zone, we sort of ranged a bit, and we're in a bit of a rangy situation where we are in between this range and this point. Come on, trading view, this point. So we're currently stuck in between this high and this low. Now this is a protected low as well, because this low broke this high over here. So essentially, if we're falling out of low, this low should not be broken, and we should see a reaction to this low. So before I get into more detail about what I'm looking at for this trade, that will be all for this trade recap, and I hope you guys have found some value in terms of how I've been seeing the markets. Now, as always, I would like to say try and be more reactive towards the markets. Don't try and predict it, because the moment you start trying to predict every single move in the markets, you're basically going to start losing a lot of trades, because you're not listening to what the market's telling you, but you're trying to make it do something that you want. So that will be all for this video, guys. I hope you enjoyed it, and I'll catch you in the next one.